Hello everyone and welcome to Invest Africa's webinar today entitled Coronavirus and the Challenge for Africa. I'm sorry that we're sort of assembling under quite somber notes given the announcement from the World Health Organization yesterday regarding coronavirus being now labeled as a pandemic. Given the relevance of the topic, given the effects that we have already seen on Africa's both the African economies, we believe as Invest Africa that we need to tackle this issue, and we're delighted to have put together a panel of experts who will be able to speak to this topic. Just a bit of housekeeping before we begin. This webinar will last 1 hour. We will be incorporating Q&A sessions throughout, so we will have one sort of halfway through and one at the end. You should have the option to type in your questions, and please do throughout. And then when we get to that Q&A session, it will be myself who will be fielding out those questions to the speakers. If you could make it clear sort of if you have a specific question for a specific speaker, if you can make that clear, that would be fantastic. There will also be a recording of this webinar, which will be made available to all registrants after the webinar, and which will be put up on the Invest Africa website as well. Without further ado, I'd like to welcome our speakers. Firstly, Nicholas Norbrook, the managing editor of the Africa Report, who will be moderating the session. Next, Arshad Abba, the Managing Director of Canback, Middle East and Africa. We're delighted also that David Murrin, Global Forecaster, is able to join us, as well as Vincent Rouget, Associate Director for Control Risk. So without further ado, Nicholas, I'll pass over to you. Thank you very much, everyone.
Hello, it's great to be here with you all in this virtual webinar. There was actually a conference on the economic impact of coronavirus that was to be held in New York today, I believe, held by the Council on Foreign Relations, which was cancelled because of coronavirus. You'll be pleased to hear you are perfectly safe on this call. The economic impacts, of course, of coronavirus on the continent will be severe. We will discuss the channels through which the continent will feel it, beyond the very real cost in human lives, which hopefully will be kept to an absolute minimum. It appears today that the virus prefers it old and cold, but no one can take that for a given. Obviously, the first line of transmission has been through financial markets. Commodity prices have been hit, and many African states are simply not ready for this. They have a big debt pile being spent in not particularly productive areas. They have weak tax collection. They don't have the fiscal buffers they had after, for example, the 2008 crash. Before we go into all that, let's get a sense of where we are at the moment with the outbreak. Vincent, can I start with you? Maybe you could just walk us through where we are in terms of cases on the continent, where they're arriving from, what kind of measures are being put in place.
Sure, thank you, Nicholas, and good morning to you all from Lagos, Nigeria, where I'm currently based. I think it's probably worth saying to start that coronavirus COVID-19 in Africa so far has been relatively minimal in terms of actual cases. The cases have been few and far between, and overall the numbers are evolving every day. But so far we've recorded less than 100 cases, and only less than a dozen countries have actually recorded cases. It is perhaps not a cause for complete celebration, because I think it also says a lot about the lack of integration of Africa and African countries with globalization and international movements. But in this case, it has actually served the continent pretty well, and helped probably delay the start of the transmission of the outbreak to some of these African countries. As we stand, South Africa is the sub-Saharan African country that has recorded the most cases of COVID-19, and we have seen a few other cases. The first one to report was Nigeria at the end of February, but so far the numbers have remained very low, and we've also seen in the last few days cases spreading mostly to Francophone West African countries, such as Senegal, Cameroon, Togo, DRC, Cote d'Ivoire, for example. Doing this list of countries, I think, also tells part of the story. The initial assumption when looking at Africa's exposure to the virus was largely based on a transmission scenario from China. And at the beginning, most of the studies that were made concerning the risk and the exposure of Africa really were looking at the amount of connections with China, the amount of trade relations with China. And I think it is perhaps worth noting that as the epidemic has spread to Europe, a lot of the new cases that we're seeing arrive on the continent are actually coming from European countries. The first few cases in Nigeria came from an Italian citizen that was traveling on business, and we've seen a number of cases being reported coming from French citizens or other European citizens as well. So the number of cases at the moment is still fairly limited, but I think this is an epidemic, obviously, where Africa is potentially lagging a bit behind, and the trend is likely to be worsening in the next few days, as the scenario that we've seen in Europe could repeat itself slightly with a slightly bit of delay. In the meantime, I think we're also seeing the operational disruption from that epidemic increase. It started pretty early on with suspensions of flights to between China and African countries. Most of the airlines, with the notable exception of Ethiopian Airlines, suspended flights to China early on. We're now seeing perhaps a second step of the containment strategies of those countries, where they are increasingly resorting to quarantine measures, not only for visitors incoming from China, but also from some of the worst affected European countries. So the operational impact is still fairly limited, but is starting to be felt. And I think that's going to be the bulk of our conversation today. But obviously, the financial and economic impact is already being felt quite starkly. I'm in Nigeria this week, and the newspaper I opened on Monday morning was titled "Coronavirus Crashes Oil Price Halves Federal Government's Revenue." And I think Arshad and David will be well placed to comment on that economic impact, but it is really something that probably will be hitting Africa hardest, if not more so than the direct consequences of the outbreak.
Arshad, let's pick up exactly on that, because it has, a lot of economists were gathered together yesterday by Bloomberg, for example, and they said, the majority believe that in the third quarter of the year, we would probably see a devaluation. A lot of people are now quite keen to take their money out of the country. There's been a lot of hot money financing Nigerian government debt. This will have a significant impact, would you say?
Yeah, I mean, hi, Arshad, calling in from Johannesburg, South Africa. I think 2 points are important. Firstly, to talk about the Nigeria situation, and then look at what is the longer term impact of lower oil prices globally. So I think from a Nigeria perspective, I think the plunge in oil prices will create significant pressure. I mean, we've seen downward pressure in Nigeria for a long time now. Central bank reserves have been down about 20% over the last 2 years. And possibly they could reach the $30 billion threshold set by the governor, where they have to devalue their currency. So I think there will be pressure. I think the other point to note on Nigeria is that the government is largely dependent on oil revenue in terms of how they run the country, but the internal economy remains a bit more resilient. They've got other sectors that are quite important to them. So I think if you look at Nigeria compared to, for example, Angola, I think they may be a bit more resilient, but significantly impacted by the oil crisis. If we look at the larger oil crisis, and I think this is quite important to the discussion, I mean, how long and how sustainable is this oil crisis, and effectively the price war between Russia and Saudi Arabia? And when we look at that, just having spoken to some of my colleagues, our sister company, the Economist Intelligence Unit, I believe that we will see some recovery or increase in oil price in the second half of the year. Just to contextualize that, if you look at the Saudi Arabia economy, right, essentially for them to be able to fund their fiscus in terms of their public service and investment plans, they need to recover oil at about $80 a barrel. So I think we're hoping that we will see that between Russia and Saudi Arabia, they'll be able to come to the table and come to some agreement. We forecast that will happen. If that does not happen, there will be some more significant impacts for African economies.
David, this does seem to be happening at a time when there isn't a US final arbiter on the markets. Someone I was speaking to a few days ago tried to sort of make the comparison with Mexico in the early 90s. But the difference was there was a Bill Clinton who was ready to step in. It doesn't look like there is anyone, especially if there's a sort of an oil price war going on between the Saudis and Russia. It doesn't look like there's any more adults in the room, if that's one way of putting it.
Okay, listening to the debate, I just want to go back to a few things to frame my answers, because I think people are failing to recognize some significant omissions. One is that the world was incredibly fragile at the beginning of this year. It wasn't euphoric, it wasn't strong, it wasn't robust. It has suffered from a 2-year hegemonic challenge by China to America, whose response was a trade war, which effectively bifurcated the world's trading system. And the exaggeration of numbers, the use of debt, the whole bubble dynamic that America created in stock markets was a defensive mechanism to being in decline. So this virus couldn't have come at a more dangerous place. My arguments as to really what was going on were commodity prices. And I predicted that oil would get to 27 prior to the virus because there was a demand crash coming, and this bifurcation was far more powerful than people realized. So we were always going to come here through a demand slump. What we call a war isn't a war. Basically, what's happened for any hydrocarbon economies, Algeria or Nigeria, and especially the ones that have kleptocracies, where they've stolen money from the people, therefore there's a huge margin of inefficiency. What they find themselves in is an unsustainable position. But if you're a swing producer like Saudi Arabia or Russia, the one option you've got when you get to the point where the price is unsustainable at current production is to increase production. And both Russia and Saudi would have come to that conclusion separately because it was their only survival mechanism in a demand slump. And what that means is any producer above their marginal price is going to get wiped out. And this is not a spat. It's not something that can be mediated by some other person. It's a fundamental mechanism of the global economy that the demand slump has literally driven the demand away. And so they've compounded it with a supply side dynamic, but that supply side dynamic is to keep themselves alive. They will try and double their output at half the price in oil. And we will end up at 20. And when we get there, we're going to stay there. That's the bit that no one really understands. By the time we recover from the virus, it will not be a month or 2 months. It'll be 12 to 18 months. So they're pushing themselves into a hole in the race, and they're wiping out every producer with a higher cost base.
Now, it's not just oil that's going to suffer. Vincent, I mean, let's talk about the Democratic Republic of Congo. There's, for example, the big Chinese cobalt and copper producer, China Moly, which took over Freeport McMoran's deposits a short while ago. They, of all the Chinese big companies active on the continent, they are perhaps slightly less connected to the government, slightly more exposed to market pressures. They will be struggling, and I imagine all the sort of supply networks plugged into their sort of ecosystem will be too. Can you speak to perhaps more broadly to the mining sector in the DRC and how they're responding? Are you there, Vincent? You may have muted yourself.
Absolutely. So I think there's a there's an impact to consider across the mining sector in general, and in particular the bulk commodity exporters that are dependent on Chinese demand, really. So there's a pass through of this crisis through the price of those commodities, but also simply on the demand of Chinese importers for commodities such as copper and cobalt, as relates to DRC, but I would also extend this to bauxite, for example, for Guinea, Conakry. When it comes to DRC, I think you're looking at a picture that is actually fairly similar to Nigeria, where it is a country that was already battling economic difficulties prior to that crisis hitting. The mining sector has been affected by revision of the mining code in 2018 that has depressed investment, followed by or around the same time was a lot of political uncertainty around the election, and generally a dependency on mining exports that gradually wound down forex reserves in Congo and led to a fairly precarious situation already before the start of the COVID-19 crisis. Forex reserves in Congo are well below $1 billion. They're a pretty fragile place. The IMF had stepped in to provide an emergency credit facility, but there was really a case of having to implement austerity in the context also of one of the major mines in the country being put under care and maintenance. So this crisis, I think, is only going to make things worse. And it is one of the countries as well where the political repercussions of this could be perhaps the most significant. In Nigeria, yes, the economy is struggling, but at least it is not an election year. It is not a year, aside from two governorship elections, where you have significant political pressures. In DRC, it is not an election year either. On the other hand, you do have a government led by President Tshisekedi since the start of 2019 that is still struggling to consolidate power, and that does need to be able to spend as a way of consolidating their authority and in a way ensuring continued stability. Now, they were already at risk of being unable to do so because of the weak state of the economy. And I think we're going to have to look closely as how much does the lower copper price and cobalt price and the contraction in demand from China affects the kind of export receipts of Congo, and at which point the situation could become a lot more complicated.
Arshad, let's just head south for a moment to South Africa. It does seem that South Africa is vulnerable through quite a few channels. It is one of the few economies on the continent to be sort of plugged into the global financial system. It is also vulnerable in terms of manufacturing jobs, which I presume will be hit by a slump in global demand, and also commodity prices matter a lot for South Africa's economy too. What other channels and what do you think will be the more long-term impact for South Africa?
So I think the big issue, I mean, David made the point of the state of the international or global economy, and I think it's a very valid point. I think at this stage, to put it up front, I don't think South Africa can afford the ill effects of COVID-19 or even the oil price shock. I think where South Africa's economy at the moment is, it was already struggling significantly with basically no growth coming through before we had the international disruptions. I think the volatility in international markets, the lack of confidence in the marketplace will have a huge impact on South Africa. I think there's two factors specifically that will influence where Africa or sub-Saharan Africa goes, largely with Southern Africa having the lowest growth over the next year. Is one thing is recovery within China. How quickly can China get going again on business? And obviously looking at confidence in the international economy, and thereafter was growth in commodity prices. But I do believe at the moment, as we stand, we don't have any fiscal space to create any stimulus in the South African economy that will make it a very tough year going forward.
And just on China, do you believe, Arshad, that they can, spin up the factory again? Because a lot of people are saying it's all very well to talk about the Chinese dumping another stimulus package into their economy, but actually, you know, the factories will be a terrific way to spread the disease again, and that's probably the last thing they want.
I think what China has shown is that they've been able to contain the virus, and I think for now, I think we will see some growth coming from China in terms of them being able to stimulate the economies and get going, but how they react will have a huge impact. I think for me, the larger concern is the second factor, is how does the rest of the world contain the coronavirus, COVID-19? And I think we've seen a larger outbreak in Europe. We're starting to see question marks on the US economy, US's ability to actually contain the virus with their fragmented healthcare system. I think the big issue for many emerging markets is largely driven by what happens in the larger markets. And that volatility has a huge impact on the other markets, and we are highly dependent on global growth to actually fuel growth in many of the Southern African economies.
Hello?
Sorry, I assume you can hear me now. Just to say, you're listening to Coronavirus and the Challenge for Africa webinar by Invest Africa. David, you had talked about this face-off between China and the US. You know, it's one of the defining things of the last few years. Is this a moment where an agile US administration, and I'm not sure we have one, but perhaps a more agile US administration would be taking advantage to score some geopolitical points? We've already seen the US be a bit more front foot forward, striking trade deals with Kenya, you know, welcoming Felix Tshisekedi, the Democratic Republic of Congo president, on a trip to the US, and getting a lot more involved with Angola, previously, you know, sort of China-only territory in previous decade or so. Do you think the US will take advantage of a China stumble to try and grab a bit more influence on the continent?
Okay. My sense of humor, I'm giggling inside because I think your question is the wrong way around. To answer what I think is the point of the question, is viruses and diseases and epidemics kill the weak in society. And you know, we've had a lot of talk about the old. I'm not so convinced that it's restricted to the old. I think that's part of the PR plan to keep everyone calm. I have a horrible feeling that we're going to find that the age targeting is much lower than we imagine. In the same way, epidemics target old social systems who are less adaptable and able to respond. If you look at what's happened in China as a lesson, their centralization has created a remarkable kind of occurrence where they could send 32,000 medics into Wuhan, they could lock the system down, and believe me, they've lied about the numbers and they continue to lie. But they have created some sort of constriction in the process. But they have a problem, like all of us. Let's just say it's not 70,000 Chinese who've been infected, or 700,000 or 7 million. But let's just say 7 million. That is a teeny fraction of their total population. This infection is incredibly able to hop from person to person. So the moment they go back to work, which they've got to try and do, essentially, they're going to spread it again in various phases. And I think the Chinese are probably about to cotton on to a phased exposure program, where you expose critical members of your society back into, you know, you make them immune and you say, we're exposing 100,000 of you, and then when you're sick, there'll be an ICU bed for you, so your mortality rate is not 12% or 10, it's more likely 6 because we can save some of you. And I think we're going to end up with an incredibly, exactly that dilemma in the Western world. Once we've shut down like Italy and we've isolated, there's a realization that how do you get your economy back to work before a vaccine comes into offering in 12 or 18 months? And the answer is phased exposure. Now, in terms of ability of America to adapt versus China and how the foreign policy affects Africa is interesting, because America has never had a threat to its soil since the Civil War. It's an incredibly fragile entity that projects its aspirations overseas and casualties are overseas, but never on its homeland. And I suspect we're about to see a very, very dubious series of responses with a leader who's narcissistic and behind the 8 ball, who disabled the CDC. And I think at the end of it, you're going to end up with Bernie Sanders could well be winning the nomination, and whoever wins that nomination will be the president. And Democratic presidents are not going to be projecting American influence. The Chinese, on the other hand, are going to benefit from all the defaulted loans in Africa, because Africa is a commodity-based economy. And as you quite said, it's not just all, it's every commodity is responding the same way. So you can assume there's going to be a revenue failure from commodities. There's going to be a social interaction with the virus, which is unthinkable on really what is a very inefficient system. So I think Africa faces a terrifying perfect storm.
I think we'll probably won't see a Sanders president, given the delegate count so far. But maybe we could go to some questions from the audience. Alex, do you have any you'd like to put to us?
Yes, we do. We've had a few, and so I'll just, which is great. And please do, everyone, keep asking those. I think, as you can see, I mean, although this webinar is, focusing on Africa, actually what seems evident is it's a much wider, much more global issue, and with lots of lots of international effects going on. So there's one here for all the panelists. What are your expectations/forecasts for the inward FDI flows to the African continent in 2020? Are there any particular countries or sectors you would highlight?
Great. Maybe we could, Vincent, you could have a go at that, then Arshad, and then David.
Absolutely. I think there are sectors maybe we haven't touched on that will be struggling in the year ahead. I think inevitably anything that has to do with travel is going to take a severe hit. And there are countries, that are reliant on tourism for a significant part of their forex receipts, for their inbound investment as well. And you can think of places like Mauritius, the Seychelles, but even South Africa to an extent that will suffer from this. Business conferences are obviously down, and places that do, we're hoping on them for development, but also as a way to attract investment in their country, are going to suffer. Rwanda in particular, has made a kind of key tenet of their development policy to emerge as a hub for business tourism, and I think we'll be taking some hits out of this. Kind of looking forward, and perhaps we've done a lot of doom and gloom so far, but I would slightly contrast and say that the effects will also be very contrasted across the continent. Some of them who are not commodity dependent and neither too dependent on exports to China may benefit in many ways from a lower oil price. And there are West African economies that already fared pretty well even during the oil price shock of 2014 to 2016. You can think of the likes of Côte d'Ivoire or Senegal, for example, for which the economic trajectory is I think a lot less alarmist than for others. In a way, I think what we're seeing perhaps is the worsening of a split where for the last decade almost, commodity exporters have struggled economically and have had the lowest growth rates on the continent, whereas some of the less commodity dependent economies, the two that I mentioned, and perhaps on the East African coast, the likes of Kenya, Tanzania, have had relatively sound economic growth. We could see that split, that divide, exacerbate or aggravates and have a bit of a two-track situation where some countries continue to grow at 6-7%, maybe a bit less considering the global headwinds. Others, on the other hand, are going to have a tough year in 2020.
I'm going to just, sorry.
Go ahead.
Is it my turn?
Why don't you go ahead, David? Arshad will come to you.
Sorry, my mistake. So I always think when you look at events, you always must look at the first degree effect. And in many ways, I feel this question is a fourth degree effect. The biggest issue that we face right now, on top of the commodity collapse, which has direct implications for hydrocarbon and commodity producers, is the impact of the virus. And one thing we must realize is that there are a couple of unknowns. How susceptible is the virus to UV light? How susceptible is it to humidity in terms of its transmission and the weight of the droplets in the air? There's some correlations we don't understand. But if we were to assume the same spread transmission rates and the same mortality rates, the real issue is which governments will survive and maintain integrity and which ones will break down. Because that's really the issue you're looking at, because the rest of the world is going into a global shutdown. And it would be very difficult to imagine that Africa is a thriving continent when the rest of the world shut down. It too is going to end up suffering economically by knock-on effects. And most importantly, how does it stop the spread of viruses? How does it cope with hospitals that are inundated and people dying at rates much higher than Wuhan? Much, much higher. And I think that's difficult because that maybe some of the countries in the north, like Morocco and Algeria, with more modern societies, higher per capita inputs into their infrastructure, have a better chance. South Africa, although there's a massive divide. But I think most African countries are really going to face an extremely challenging period if the virus is not inhibited by UV light and humidity and temperature actually accelerated all at the same rates we're seeing in Europe. Then the question is how effectively countries shut themselves down. And I can't see African countries doing that very well.
I would urge everyone just to research Nigeria's response to the very frightening Ebola outbreak a few years ago, which won commendations from around the world. Perhaps people didn't expect that kind of sharp response coming out of Lagos, but it was pretty impressive.
But the one thing I'd like to add about that, yes, I agree. But the difference is Ebola had a self-regulating quality. It was so quick to kill that it couldn't spread. Whereas this is completely the opposite. This has an incredible way of inveigling itself into society with as long as some people think 21 days incubation process. And in the developed world, we haven't got around the protocols to contain it. So it's very difficult to see Africa finding a solution that the Western world and even China didn't really come up with.
Right, but as the mortality rates are so much lower than Ebola, I just wanted to push back on some of the state collapse kind of stuff. Arshad, let's try and pick out then the FDI impacts that you think we might see over the next 6 months.
So I think from an FDI perspective, I mean, to putting a number to that would be very difficult. I mean, it's like shooting into the sunlight, right? So I think the important thing to look at there is, I think what will happen on the African continent is that economies that are more diversified will be more resilient to the process. I do agree with David that we will see a significant decline in growth rates that will be impacted by both COVID-19 and obviously the price wars going on. Other thing that is important for me to highlight is, so yes, we do know that tourism will be significantly impacted. That's the one sector we know will be significantly impacted. Countries like Morocco will feel the pain of that, with them growing that as part of their total GDP. In terms of the impact of the coronavirus, I think it is important to note that Ebola is a much more heavier virus to carry and would not spread as easily as COVID-19. The challenge for Africa remains the public healthcare system, specifically in sub-Saharan Africa. I think Morocco and I think Tunisia has made some good strides in terms of the development of their healthcare. So I think North Africa will feel the impact a bit less than sub-Saharan Africa. The challenge for sub-Saharan Africa remains highly populated and dense areas with little awareness of the impact of the virus and how to contain that. So I think it's really unknown in terms of how the virus plays out. And the way I see it right now is that COVID-19 in Africa is not real right now, because we haven't really seen its impact and its ability to spread right now. And only once it becomes a larger issue, if it does become a big issue, will essentially drive out how investment comes into Africa. And I think the second point, going back to the US and some of the larger economies, I think they've become very much internally focused. So they will be having to allocate resources in terms of how they manage this war within their own jurisdictions first, before they look at foreign investment. So I think that's going to be it's a different ball game we're looking at right now, and we have to look into the different lens. I think that's where I do agree with David.
So let's stay then with that more political lens, Vincent, you sort of looking at West Africa very closely. There are elections coming up in Côte d'Ivoire in October, in Ghana in November. There are no elections in Nigeria till 2023, but it is an eminently political time in the country, with people fighting over the glittering electoral prize of Kano as we speak. The emir was dethroned a couple of days ago. What do you think political impacts of a severe coronavirus outbreak might be?
So I think, again, we can go back to the first effect and secondary effects. Looking at first effect, there's a question that was raised just a moment ago on the capacity of those countries to handle an outbreak, and the strain that puts on governments, potentially the way that completely can shatter the popularity of a government if it is seen to be either lying about the numbers or being completely unable to respond. So it is the kind of event that potentially could play into the hands of opposition candidates in elections. However, we recognize that in many of those elections coming up, there is still a huge premium on being the incumbent or being part of the the ruling camp, and controlling many of the other factors that really make the decision in those elections. Perhaps the one that we will be watching the most closely will be Ghana, heading towards general elections at the end of November, early December. Ghanaian elections are traditionally very competitive. There is a two-party system that regularly produces changes of power. And Nana Akufo-Addo, the president since 2016, was already facing quite a tight re-election campaign. On record, his economic record is solid. When you look at growth rates, when you look at the way he has managed to stabilize the economy, voters don't necessarily see it the same way, because of a lot of these early election promises have not necessarily materialized, but also some of the headline growth or inflation indicators are not felt in the same way by the population. So Akufo-Addo was already facing quite a tough race for election. Now the oil price crashing means Ghana will have slightly less money to spend, and therefore slightly less money this year to spend on populist, or you could argue fairly targeted pre-election spending to win votes. And it is potentially, if the virus would spread to Ghana, and I should state that at this stage there are no recorded cases there, this is perhaps where, of all countries, we could see the virus potentially having a political impact on the results of the election. It is far too early to say that with certainty. I'm just flagging Ghana as I think one of the main countries to follow for political impacts. More generally, perhaps stepping out of elections, the types of impacts that we could see at a societal level is first a rise in fake news, and the challenges actually for a lot of businesses in those areas, organizations in those areas, in dealing with news that might spread like wildfire around the virus, often without any substance to them. And it is something that we see around any election time, but in a high publicity topic such as coronavirus, we've already seen an uptick in cases of complete misreporting or fake news around that. The other repercussion that we saw so far, mainly isolated incidents, have to do with hostility towards Chinese nationals. And we did see in a few countries cases of either harassment or hostility, or just rumors again spreading concerning Chinese nationals in cities. Perhaps the significance of this will now wane a little bit now that the epidemic is spreading, and that most of the cases actually come from European countries rather than China. But these are the main political consequences that we're seeing right away. There's also obviously the broader question around trust in healthcare system, and whether, as the other panelists pointed, the lack of trust and the lack of belief in state capacity for healthcare will have an impact on how the virus spreads.
David, maybe you could give us a historical perspective. Is there anything we can learn from previous pandemics, or is this such a novel virus and the interconnection of the world so deep that it's hard to sort of read back from history any potential future?
Well, let's just try and work out what we can learn. This virus, if it isn't, would be exactly having the hallmarks of a biogenetic weapon. And there are many labs in the world that would have created substances that behave like this in the way it transmits. What makes it different is the incubation period, the infectivity period, and the viral load over a period of time that it's unstoppable with our normal systems. If you look at the influenza and the Spanish flu, which was of 50 million people, and it went through 3 waves in effect through society, and those waves are relevant actually, because I think we will see waves in terms of infection and get it under control and come back again. But the issue here is this RNA virus has an incredible ability to mutate. We've already seen 2 strains of mutation. And the concerning thing is the bigger the pool in which this infects, the more likely you are to have numerical permutations. Now, some of those can be have lower mortality rates, and some of them can have increased mortality rates. So the more the virus gets into the human pool before we have an immunity, the greater the risk it develops something that's even more unpleasant. So I think the interconnectivity of the world is a concern when you multiply that times the size of the pool and the probabilities of new strains. That's completely new. And yes, we have a vaccine capability, but it's not for 12 to 18 months in any scale required. So we're completely exposed prior to that moment. And in many ways, I think we're just as vulnerable as they were in 1918 through the 2 years where they saw the Spanish flu in 3 waves. And so the lessons are, it can be highly damaging to society, even though we have modern technology. The concern I have over Africa when I hear that there are not many cases is quite simple. There's very little testing. And I don't believe the numbers in the UK. I don't believe our governments have been honest with us in the Western world about the qualities we're seeing. And we're about to find out the gaps between what they told us and what we're really about to experience. But one of the things that's interesting is America has a terrible testing problem. Its kits don't work. They don't have enough of them. So you don't really know how it's spreading, and you don't know whether you're containing it or not. Africa's problem is completely compounded. There is no way that it's going to do enough testing to create accurate containment around the clusters before they join up. So I just think we have to assume it's everywhere. We have to assume it's transmitting at a fairly similar rate. And suddenly when you start to see like any more than 50 cases with a corresponding death, you know that your curve is going to look like every other country before you. So those are the key lessons. Actually look at China, look at Italy, look at Southern Korea, look what they went through, and look at the variations in their flows, what they did and how they did it, and learn from each country who's ahead of you in the chain.
The immunologists that my sister, who's a doctor, and I have to, obviously, this is not medical advice, but just to echo some of those concerns, the immunologists' great fear, I believe, is what happens when it comes back in October. That's when we might see something you mentioned, David. That's when we might see the mutation, and if it does, it will come at a highly charged time for the world. And it was touched on earlier. If it comes back in October, with a more lethal form just ahead of the US elections, it will certainly provoke some serious ructions. Arshad, we probably won't see the V-shaped economic recovery that was being talked about glibly 6 weeks ago. It might well be more U-shaped. What does it mean for Africa when the US economy goes into a prolonged slump?
I think it will have a significant impact on Africa overall. I do think that Africa is, especially South Africa, interlinked with the international markets. So we will see a significant impact in Africa's largest economies, and essentially will push the continent backwards in terms of the prescribed growth rates of 5% in East Africa, 5.5% in North Africa. We'll see that coming down quite significantly, and we'll see a huge drag on African economies until we see global pickup, specifically related to the US and China.
And Vincent, talking about the long-term impacts that the coronavirus outbreak might have on African economies, there is a concern, I guess, that every single region of the world will be busy trying to rebuild. If, God forbid, there is an Italian banking crisis, then you can be sure that the Eurozone will be extremely focused on that. China, which had traditionally been a source of largesse, was already tightening the taps even before this hit. I mean, we saw in Kenya, they did not agree to fund the next leg of the single gauge railway. But that's just one example. There are others. What do you expect the long-term impact to be? And if those traditional sources of relief are absent, how will African economies cope?
So you're right. I think perhaps the impact coming from China is the most significant. There was already perhaps a more measured approach coming from China towards lending and towards financing infrastructure projects on the continent. I think that was visible starting from 2018 when they made clear that from now on the projects that they were financing should be more economically viable, backed by pre-feasibility studies, and also to address the concern that were raised around environment, for example, that they should be more there should be environmental safeguards as part of them. So that had already driven a bit more caution on the part of Chinese lenders towards projects in Africa. I think now the truth is that they are going to be busy with the recovery at home, and so you can expect that the focus is certainly not going to be on infrastructure lending for faraway places, however important that is to China's foreign policy objectives. So I think there will be a slight contraction in the amount of lending, in the amount of funding that some of these countries can seek to finance large bulk infrastructure talking about roads, railway, hydropower dams, the kinds of projects where Chinese companies have typically played a big role lately. I do think, however, that it is still an extremely competitive continent for inbound investment, and one that has become more so in recent years. And we've seen the other countries kind of replicate the approach of China or try to increase investment towards the continent, and also try to increase development finance. So I don't think we're looking at a complete turn away from this, but you are probably expecting a couple tougher years when it comes to generally development and infrastructure lending there.
Great. So Alex, hoping you're still there, we'll take another round of questions from Alex.
Perfect. I was just about to jump in, so glad. Yeah, we've had lots actually, which is fantastic, and which is great. Vincent, funnily enough, I know you mentioned fake news. The UK government announced today, well, it did that it was granting some money to combating fake news about Corona. So glad to see that, that they're responding. We've had a couple of questions which touch on the same topic, so I'm going to roll these into one. You will have, I'm sure the four of you are aware that the news today that Uganda has stopped incoming flights. So a couple of our audience have asked around, will we be seeing the same shutdown that many other countries have been experiencing? Case in point, Italy, China, and the news today around Ireland. Will we be seeing these same shutdowns, and will this then be affecting the newly ratified African Continental Free Trade Agreement? What are the implications on that Africa trade and for Africa travel?
Great. So, Vincent, do you want to take that question on the impact on flights?
Yes, I think we're really seeing in the last maybe 7 days the response of these governments stepping up, and their logic is still that of containment and kind of prevention of preventing the virus from getting to their countries. So perhaps an earlier stage than some of the European countries that are already more in a delay phase of their response. So far, or the initial measure, as I mentioned, was suspending flights to China, because that was seen as the source of the epidemic. Then the next steps that most countries have taken have mostly been around controls for incoming travelers. And so you do have many countries that now have temperature testing requirements for forms, enhanced screening, and for those that have an elevated profile, depending on symptoms or depending on where they're coming from, a requirement to self-isolate. Some countries have gone so far as to establish isolation centers in their capital cities to basically make sure that the people that are coming in and that show symptoms are appropriately quarantined, which I think for many international inbound travelers will be a key consideration to make. Are you exposing your people going on business visits, for example, to be held for 14 days in a medical facility in the capital city of a country that you were planning to visit only for a few days? At the moment, we haven't seen that many complete flight suspensions, but there are countries that are talking about it. And then the same way that borders so far by and large remain open, but we have seen a few what I would perhaps characterize as pretty knee-jerk reactions of certain governments to shut down their borders to personnel movements. As an example, Cameroon reported 2 cases of coronavirus a few days ago, and Chad almost immediately declared that there wouldn't be no more people crossing the border between the 2 countries. It will really depend on how the epidemic progresses, but I think there is a bit of a copycat effect, where if some of these, especially the leading economies in the continent, start having flight suspensions with Europe and border shutdowns, then the others will most likely follow to have a bit of a coherent approach.
Arshad, maybe you could tackle the one on the Africa Free Trade Zone and impacts on intra-African trade.
So I think that's quite interesting. I mean, the Africa Free Trade Agreement has taken a long time to come into effect, and I think there's still a lot of work to be done before it gets fully materialized. I do think that as the COVID-19 develops in Africa, I think the response will be rather of containment and protection of people within the country. So I think the view will be that we know that if it can get into our populace, because of our underdevelopment on health, it could have a larger impact. So I do believe that the focus will be on health to lock down and will have a further impact on free trade agreement. I think African economies sit in a very difficult situation, because on the one side, government intervention will have a significant impact on GDP growth and maintaining confidence in the economy. So balancing the economic effect and balancing the health effect of containing the virus, of not becoming a epidemic or pandemic in their own countries, will be a challenge many African countries will face going forward. It's just very difficult right now to call how they'll react, because it really has a huge impact both from a health perspective and an economic perspective.
Great. David, did you want to tackle one of them?
You tell me what you want me to tackle.
Well, we could get another question, Alex, if you have some more.
Yeah, I think definitely. I think time for one more question. So this is, we've mentioned lots, well, at the beginning of this webinar around oil and the effect that this is going to have on the future. We've had a question regarding this. you know, that given the fact that the price of oil is more than likely not going to be able to stabilize by the end of Q2, are you in agreement, all of you, I suppose, that a Nigerian devaluation is likely?
Yes.
There we are. That
David.
leads back to the end of the webinar, I suppose. No. Any elaboration?
Look, so if you look at the devaluations of hydrocarbon currencies, and you see the same in Saudi Arabia and Russia and any of their hallmark is whenever, if they've lost 50% of their production or 50% of their revenues at a fixed production, they will try and compensate through their currency. The problem they've got is essentially they start that process, and if they have any dollarized debt within their economy, they become super susceptible to the dollarized debt blowing them up. And so there are limitations on how you structure such a definancing. It'll naturally happen because the market will realize the countries are obviously losing their balances completely wrong financially to support their economies. So this currency will start to move. And then if they go and accelerate it, before they know it, they could accelerate themselves into a problem where significant dollar debt actually makes them a bankrupt country. So there's a limitation on that strategy.
Arshad?
I do agree with David. I think we will see a devaluation coming. So I think where they are, I think we have to understand, even before the price shocks on oil, there were significant concerns on Nigeria in terms of their oil revenue and being able to maintain their revenue levels.
And Vincent, maybe you can speak to the Ghanaian case too.
Yes, I think Ghana tends to be a lot less affected by the shock of the oil price. The economy is by far much less dependent on oil revenue. Just to go back on Nigeria, I think what's important to remember is that compared to 2008, where a global financial crisis hit, the buffers are nowhere near what they used to be. We're now around $36 billion in forex reserves, and the CBN had indicated that they would consider devaluation if the reserves were to go under 30. It now looks like we will hit that 30 threshold, probably in the next 4 to 6 months. And I think most analysts would expect that you'd have a devaluation coming around, Q3 of 2020, possibly slightly earlier, if the oil price remains at where it is currently.
Fantastic. Alex, any more questions, or shall we give the panelists a last word?
Yes, I think we've got a couple of minutes now, so I think sort of last comments from all of you, and then we can wrap it up.
Great. So maybe in your final comments, you can speak to some of the longer term impacts that we're going to see, both on the continent and in the sort of the global economic system. Why don't you kick us off, David?
Okay, so I do see this next 12 months as being akin to a 1929 type phase for the American economy, but this is for the global economy. Africa's problem is twofold. One is its revenue base, which was commodity-led on the whole, stalling. The other is the virus and social cohesion through that process. And the third is that the main investors in Africa, as in the other countries, are so occupied with their own survival and trying to get themselves back to work that, in fact, Africa is led more than we've seen to its own devices from the West. But China understands the ability to jump in and exert more influence, whether they're defaulted loans or new loans. So I think it lays Africa open to China in a way that's very concerning. And the countries that will fare best are those governments who are have a number of qualities. One is their ability to genuinely organize their people effectively. And I think in that regard, South Africa is strongly positioned. But those governments which are perceived to be dishonest and kleptocracies actually are very exposed to social change, because there won't be enough to go around, and the politicians will really become the targets because they will have skimmed off the top large portions. So I'd watch for social change in those environments.
Arshad?
I think the first point I would start off with is that I believe that the larger economies are very much internally focused to deal with the COVID-19 on their side and other matters like trade wars that are happening. So I think that will have a huge impact on Africa. I think it's important to note that as Africa, we haven't really understood or seen the full impact of COVID-19. We have vulnerabilities with HIV, AIDS, TB within the populace and highly informal segments of the market that will define, if it gets into this market, what the impacts could be. I believe that economies that are highly diverse will be resilient through the process, but how we react as a continent to contain the virus will be quite important in terms of defining how we go forward. I think the last thing is I believe that what this has shown is the dependence of Africa on China and the influence of Africa on China. So as the way China comes out of this pandemic, are they able to restart the economy? Can they create stimulus? Will have a huge impact, and that needs to be watched closely in terms of specifically sub-Saharan Africa and effectively its future and growth over the next 2 to 3 years.
Fantastic. And Vincent.
Yes, I wanted to finish with perhaps more of a note on risk management as organizations who may be listening and wondering what do we do with this. In a way, because the virus has hit with a lag in Africa and because the next few weeks might probably see an increase in cases, I would say that now is the time really to think about how do you retain resilience in your business. How do you make sure you have business continuity for a situation that is likely to get worse? There's a lot of lessons that we can learn already from the experience of Asia and now of European countries. A lot of the companies that are operating on the continent will already have the experience because many of them are linked to global supply chains and obviously working as part of global organizations. But there's a couple of considerations to make. One, I think, is considering that the conditions for working remotely in many of those countries, for many of staff of those organizations, might not be ideal and might not be as good as what you can have in Europe, for example. So that is one thing that organizations should bear in mind when they're thinking about their business continuity planning. Another that actually has come up in a lot of our conversations with clients is around how do you maintain information security at a time where you are sending your people home, having them work on public Wi-Fi or far less well-protected Wi-Fi. These are considerations I think that many organizations that are primarily focused on Africa that haven't yet been hit at a global level by this situation should already be considering, because it will most likely come to affect them in the next few weeks.
Great. And if you want more on the economic impacts, I do recommend a podcast I did with Ali Khan Sachu. That was last week. You can find that on the africareport.com. Thanks very much to everyone who's listening. Alex, I'll hand it back to you, and thanks to our panel.
Thank you very much to the panelists and all those who asked questions. Obviously, we will all be aware of the sort of limitations of travel and the fact that public gatherings are being advised against. Invest Africa is rolling out a webinar series in response to this, and obviously we'll keep you all updated regarding these as and when they are finalized. Hopefully the online meetings is a recommendation. So we're really looking forward to welcoming you all to the next webinar. Nicholas, Arshad, David, and Vincent, thank you so much for your thoughts. And to you all, have a very lovely week. Thank you very much.